All right, today we're tearing down Plug Power's latest Q2 2025 earnings report. Now, we all know the hydrogen space can be a wild ride, and this report is our best look yet at a huge question. Is this company finally turning a corner, or is it still just teetering on the edge?
And that brings us to the big central question of the day. I mean, it sounds kind of crazy, right? How can losing money on almost every single thing you sell be a good sign? Well, for Plug Power, the answer is complicated. Yes, they are losing money, but that's not the whole story. Let's dig into the numbers.
So here's the number that jumps off the page at you, a negative 31% gross margin for the quarter. Let's be crystal clear about what that means. For every dollar of stuff they sold, it cost them about $1.31 just to make it. Ouch. That is a really tough number to look at, no question about it.
But, and this is a huge but, here's where the context is absolutely everything. A year ago, that same number was a truly staggering negative 92%. So yeah, negative 31% is still deep in the red. But the improvement here is massive. It is dramatic. And this is the heart of the whole cautious turnaround story we're seeing. The direction of travel is way better, even if they're not at their destination yet.
Okay, so with that crucial bit of context in mind, let's zoom out and look at the full report card for the quarter. And as you're about to see, it was definitely a mixed bag.
Here are the two big ones everyone on Wall Street was watching. You got the top line, revenue, coming in at $174 million. That was a solid beat against what analysts were expecting, which is a great sign for demand. But then you look at the bottom line, earnings per share, or EPS, and they missed by just a penny. So profitability is still just out of reach.
And this slide right here perfectly captures that tug of war happening inside the company right now. On the good side, you've got strong revenue growth and that huge improvement in margins we just talked about. But on the bad side, they're still not hitting those profit targets. And yeah, the amount of cash they're burning through is still a major concern for investors. You can't ignore that execution risk.
You know, with a report like this, some good, some bad, you might have expected the stock to go a little crazy. But the market's reaction was surprisingly chill. The stock just drifted down about 2.5%. And what that tells you is that the market is basically in a wait-and-see mode, pricing in both the good progress and the big risks that are still on the table.
So the big question is, how is management going to fix this profitability problem? Well, they've laid out a whole strategy for it. They're calling it Project Quantum Leap. Let's break down what that actually is. But before we get into their plan, let's just make sure we're all on the same page with this term gross margin, because it's so important here. All it is the money you make from selling something minus the direct cost of actually making it. For Plug Power, getting this number from negative to positive is without a doubt job number one.
So this is it, Project Quantum Leap. It's their 6-point battle plan, and you could see it's pretty comprehensive. They're tackling everything from cutting costs and making their operations more efficient to getting better pricing for their services and, maybe most importantly, keeping a really tight grip on their cash. And management isn't just talking in hypotheticals. They are putting a date on their big promise. They said right on the earnings call that they are on track to hit gross margin neutrality. That's basically break even by the fourth quarter of this year. That is a huge line in the sand, and you can bet investors are going to be watching that like a hawk.
Now, while that path to overall profitability is still a work in progress, there is one part of the business that is just shining right now. It really gives us a glimpse into what the future could look like, and that's the electrolyzer division. Just this segment alone brought in roughly $45 million in revenue this quarter.
But here's the number that'll make your jaw drop. That's a nearly threefold increase from the same time last year. That is absolutely explosive growth, and it really shows you that the demand for green hydrogen technology is for real, and it's happening now. This is a huge long-term growth driver for the company.
Okay, so looking forward, Plug's success isn't just about what they do inside their own walls. There are some powerful forces out there and some really key milestones coming up that are going to shape their future.
And a massive factor here is government policy. There's been some recent legislation that gives a lot of clarity on two key tax credits, the PTC and the ITC. You can think of these as a huge tailwind from the government, basically making the math work for green hydrogen and driving a ton of demand for everything Plug sells.
So if you're following the story, what should you be looking for over the next 6 months? Well, number 1, 2, and 3 is that gross margin number. We need to see progress in Q3 and Q4. Besides that, keep an eye out for big new orders for their forklift business, major contract wins for those booming electrolyzers, and any news on their big new hydrogen plant in Texas. All right, let's pull all this together.
What's the final takeaway, and what are we expecting to see on the next earnings call?
Here's the bottom line. The whole story around Plug Power is starting to change. It's feeling less like a story about pure survival, and more like we could be at a genuine turning point towards profitability. But, and it's a big but, the road ahead is not going to be a straight line, and the risk that they just can't pull it off is still very, very real.
So here's our call for what's next. For the Q3 report, we're expecting to see another step in the right direction for gross margin. Better, but still negative. Q4, though, that's the real test. They have to get that margin close to break even. It is absolutely critical for them to prove the plan is working. And until then, expect the stock to stay volatile, jumping on any bit of news about margins or new deals.
Based on everything we've seen, we're giving this a market perform rating. And that really reflects the balancing act this stock is in right now. You have real, tangible signs of things getting better and a massive growth opportunity ahead. But that's being weighed down by some serious execution risk and a long, hard road to get to consistent profits.
And of course, just a final reminder, this analysis is for informational purposes only. It is not financial advice.